still recovering personally. But yeah, let me just clear all this off real quick. So yeah, looking at NASDAQ on the monthly, it's a new week, so it's always a good idea to just clear the entire chart, start from scratch, and just give yourself a fresh perspective so you're not too stuck on whatever bias you had. But it should line up to what you already had. Honestly, it shouldn't really be too much of a difference. So off rip, I'm gonna mark up the closest structure that we just broke on both sides. So I'm looking here, right in here, right? This is the most recent structure that we just broke to the upside. That confirmed price wanted to go higher on the monthly. And this was another one down here. This was the previous all-time high. And what happened? We broke structure to the upside, full body candle, letting us know we wanted to go higher. And then the next candle came in and retested and then, continued higher. And you most likely would have had, this structure here marked up, because in order for us to get up here, we had to break this structure. So you could have had this structure here marked up for possible buy limits, and you could have had this structure here. So your entry should have been at this and at this. So all that was your range, and then plus on lower time frames, I'm pretty sure there's accumulation right there as well. But going back to where we are now, we did break this structure right in here. So buy limits off rip automatically. Like, okay, anytime price comes back to retest structure, that's essentially where you should be looking to get in. If you don't want to do buy limits, you can go down to smaller time frames and look for accumulation to have more confirmation, because just because you have the structure and the line marked up doesn't mean price has to respect it. Price can easily blow past this. So to get that confirmation, you want to look for accumulation, which is what we've been doing the entire time. And then also I would also mark up these lows, because if this structure fails, the next buy limit you want to be the next place to set buy limits would be at the liquidity, because once liquidity is swept, there's a chance that price could reverse. Similar to here, how we weren't really able to break structure with the full body candle, so we swept this liquidity and then price reversed. Same concept with that. And now once we look closer to what's happening here, go to the weekly now. We're just doing top down analysis, and I don't know why it didn't show on all time frames. Boom. All right, now we're on the weekly, and you're able to see the structure even more. And this was another entry as well, right here after we broke the all-time highs on the weekly as well. Full body candle, how we came back in, but we eventually broke above this structure right here. We broke these highs, full body candle, came back for the retest, and price flew over 3,600 points to the upside, and then it came all the way back down. And what did it do? It swept the liquidity. Boom. We swept that liquidity and then proceeded higher. And this was a whole setup. This was all the accumulation, right? And then we swept all these lows, broke structure to the upside on the weekly, full body candle confirmation, and then proceeded. So this whole structure was swept. This whole structure was used as liquidity to then proceed higher. Why? Because there's another accumulation schematic here. Anytime you break structure to the upside, that confirms accumulation has occurred. So you will see the setup over and over on all time frames. You'll see this all the time. But sometimes the setups can get swept and then continue higher. Right? That's also possible. And then this all becomes another play, like boom, boom, the sweep, break above. So sometimes that's why you want to use the higher time frame first and kind of find the overarching structure on the monthly, the weekly, and then use the lower time frames like daily, 4 hour, 1 hour to really dissect and find the accumulation to have those even tighter entries and less risk. But as we see, this was that monthly structure. Going back to the monthly, This is that monthly structure here. We broke full body candle. So now we're looking at it on the weekly. We see more of it, and we want to go down to the daily now. The next goal here is to break some daily structure to the upside. Right? This is the first high of structure that we would need to break to confirm that we want to go higher. Like, we cannot go higher until we break the structure. And we already tried to once. We swept it though, even tapping into this previous break of structure here, right? We broke structure to the downside. So sellers, boom, you want to be in there, right there, right? That's the best place to sell. I wouldn't be trying to sell in an area where it's accumulating on the 4 hour. And then once we get that break of structure, then we're going to have more confirmation going down to the 4 hours. This is that same daily high. This is that same structure. Look how we tried to break it the first time. People had buy limits there, and we had a reaction. 40 pips, cool, and then boom, reversed, full body candle, retested, nasty sell off. 600 points, no drawdown. You risk 30 points to make 600. That's a very good risk to reward. Maybe you probably would have had TP right here. It didn't come to your TP. Maybe you would have had a TP here. I would definitely TP here first, because again, once price hits or sweeps liquidity, there's a chance of reversal, and that's exactly what it did. And this is that first high that was created in this structure here, and then we tried to break above several times, and then price reversed 350 points, just having a sell limit there, right? That's a place where you want to do sell limits, is at liquidity. So if we're going to counter trend trade, the same way we look for buys, the same exact way you look for sells. But since we are uptrending overall in general with NASDAQ, I'm really only focused on the buys. I do see the sells, but I just choose to ignore them because I want to, swing trade. I like to hold my trades and stick in one direction. And I think it adds another layer of focus as well, because you're not trying to catch every single up and down, left and right. You're just flowing with the market. And this guy really joined the New York session tab, and he's still in there. He's not even paying attention. That's crazy work. Let me wrong. Okay, and we got that 4 hour break of structure. Eventually, after all these times of sweeping, finally broke above there, and then continued to break above. Came all the way down, almost to these lows. All right, this is, if we break beneath these lows with a full body candle, then we know that we're gonna go lower. Right, so after those lows were swept, welcome in, brother. I pretty much started from scratch, and now we're here, almost back to where we were. But yeah, we swept these lows, price continued. We're still trading above this 4 hour break of structure. So as long as we remain above this structure here, or we don't violate the setup, then we're still looking for buys. And then the buys that we took last week, or on Friday, all happen in here. So as you mark up the structure, right, again, this is the first high, because this whole move from these lows to where it is now, that's like 400 points, almost 600 point movement. But as we see, we broke these highs with a full body candle, came back to retest. Let's go to the hour time frame. We'll actually stay here. Let's stay here really quick and mark up some more structure. We broke these highs. We broke above these highs. Look how we tried to initially, and then after we swept liquidity, price reversed. But because we're now getting that change of character here, there's no point of looking for sells, because now we have confirmation of bullishness. We tried to sweep, came back, didn't sell off too much, but the next candle fully did close, and then we retested twice. Nasty work. And I believe we caught these trades live on Friday as well. For those of you that were on the New York session, I believe we caught it at like 7 a.m. Yeah, 7 a.m. right there. Yeah, we had buy limits at the structure right in here because on 6:30 is when the call started. So 6:30, so I think price had already ran. It was already up here. I'm like, damn, like if it comes back, we want to get in at this structure. So when the market opened at 7 a.m. or when it turned 7 a.m., that shit immediately dropped back down here, got us in, and then flew from there. So if you were on that call, you definitely capitalized if you took the position. But super clean play. And of course, if you just look at this, what's happening, you can see that this is accumulation, right? The low, the high, the sweep, and then we broke above, came back to retest 7 a.m. Also, giving us that entry. And then there was also more accumulation here too. And then price flew, man. Easy work. Like this is textbook right here, right? Again, accumulation, the sweep, break above. So either one would have worked, but this is that 4-hour structure. This is that 4-hour structure. And then we just went to the smaller time frames to dissect it. And then I know people like to use super small risks. So identifying these smaller areas of accumulation allows you to take the trade and have such a small stop loss without risking, larger zones, which would be the stop loss down here. Because this is also, again, that 4-hour structure, but now on the 15-minute, you can see, right? We have the low, the high, the sweep, break above right here, full body candle, and then that was a retest. So instead of using this whole thing as your stop loss, you could have, boom, narrowed it down right in there. But this whole area was valid from that 4-hour break of structure and below. All this was valid for buy. So if you were under leveraging with 0.01s, you're able to withstand, $400 drawdown. That's one position, right? You can withstand that. But if you're looking to scalp and, not risk $400 with a 0.01, maybe you want to use a higher lot size or whatever. But that's essentially what you have to be willing to accept. This entire area here. So all this drawdown, all these pullbacks, you really shouldn't have been like stopped out. And if you were, you definitely should have been looking to get back in for the buys, especially after we broke on the 4-hour and got that confirmation. That was pretty solid evidence for us to continue. But now we're just looking for the daily. Once we get a daily break of structure, I'm going to be even more excited. Let me fix this. Let me make sure. I don't want this to be visible in all the time zones. Let's see. This one too. All right, perfect. Now we need that daily break of structure. This would be that first high. So breaking above this would be solid. And then if you got a candle that somehow was able to break all this too, like both of these, that would be nice. But by the time that happens, price may fly. So the fact that we've been here consolidating for a while, like once it breaks through, the shit might just run. Like you never know though. We'll see. It's still in a very bullish environment. Again, this was like all the liquidity being built up, the sweep, break above, came very deep, swept the whole structure with the wick, and then price took off. So, and now we're back here, the same structure. So it should hold up. If it doesn't and goes lower, that's fine. It is what it is. But right now, this is where the accumulation is happening. So I can't really deny it unless we break below these lows with the full body candle. Then so far in the 4-hour time frame, it's accumulating. Once we get the daily, that'll be even more confirmation to hold this. If you draw the Fibonacci from the lows here to the highs, anything beneath this is the discount zone. So we're in discount territory for buys. If you were looking to sell very aggressively, then go from the highs to the lows. The discounts for the sells are not even until up here. So if you are selling, you're selling at a premium as well, in a higher risk area where price could reverse bullish. So Just keep that in mind as well. If you draw the Fibonacci from these lows down here before we broke the all-time highs previously, right? The discount buys are way down here, which would essentially be a retest of the structure, right? We have a higher high, a higher low, a higher high. 50% is right here, which would be a retest of the previous all-time highs, which is fair. You know, that's essentially the monthly time frame structure, and this was still bullish overall, right? That's still higher high and higher low, higher high, higher low. That's an uptrend. Currently, it's in a bearish cycle, but you know, don't forget that overall this is bullish. And if you look at the sells, oh, we already did the sells, but yeah, discounts up there. It looks good though. It looks good. But that's pretty much it for NAS. It's pretty much it for NAS. Let me go ahead and boom.